International Monetary Fund is getting more upbeat about the world's economy. It has upgraded its global growth forecast for this year by 0.2 of a percentage point to 3.1%. And it expects global growth to be steady in 2025 at 3.2%. This as inflation slows down across regions. The U.S. and several large emerging economies are showing greater than expected resilience, while China's fiscal support is a welcome sign too. Global headline inflation is expected to fall to 5.8% in 2024 and 4.4% in 2025. Well, meanwhile, the Eurozone narrowly avoided recession at the end of last year. Economic output across the 20 countries that use the euro stagnated in the last quarter compared to the 3 months before. It was weighed down by its largest economy, Germany, which shrank 0.3%. Italy and Spain both did better than expected, growing in the last 3 months of the year. The wider EU economy, which includes 27 member states, also dodged a recession. Well, to talk more about the state of the global economy, I'm joined by Anthony Chan. He's the former chief economist at JP Morgan Chase. Thank you so much, Anthony, for joining us again.
Pleasure to be with you, Francis.
Well, first of all, let's talk about this IMF assessment that provided an optimistic outlook on the global economy. Was this expected, and what do you make of all this, and what's fueling this optimistic outlook?
Well, Francis, what we've been seeing is that inflation has been coming down, perhaps even faster than anyone expected. And that, of course, means that central banks have a little bit more flexibility with regard to financial conditions. That means that they don't have to raise rates as high. It also means they can start lowering rates, and all that is going to be supportive of economic growth. And that's one of the reasons why, or the major reason, why you're seeing this upward revision to economic growth to the major economies like the United States and China.
Let's talk about China because it's such a big part of the global economy. The IMF says China's economy will grow by 4.6% this year. That's about 0.4 of a percentage point from October, although it's down from 5.2% last year. So is this in part because of China's real estate sector and these new government policies we've been talking about to try to support developers and buyers? Are there other issues at play?
Well, yes, that's part of the economic puzzle that explains what's going on in China. It was still very encouraging to see them revise upward the growth numbers. And the reason for that, I think, is the recent stimulus measures. You saw the reserve requirement ratio coming down. You see the Chinese authorities supporting financial markets and supporting, in particular, the equity market, which should boost confidence and hopefully have some positive impacts on consumer spending. So all those factors are helping the Chinese economy grow a little bit faster. But you're absolutely spot on when you say that the real estate sector is still a negative headwind. The good news is that despite the negative headwind, economic growth is still going to be decent in China, both this year and even into 2025.
As you know, we are still dealing with some ongoing crises in Ukraine and the Middle East, where we're seeing these increased Houthi attacks on ships in the Red Sea that has been having a major impact on world trade. Could we see this outlook change amid fears of a widening conflict in the Middle East?
Oh, absolutely. In fact, the authorities indicated that they are looking for inflation to be coming down. However, if all of a sudden these geopolitical uncertainties or developments materialize and energy prices go up, which, by the way, they expect energy prices to come down. If food prices go up because of these geopolitical risks, they expect commodity prices to come down. All these factors are risk, and if they materialize to the negative side, then that would, of course, put downward pressure not only on economic growth, but it would put upward pressure on inflation, and that would reduce the ability of central banks to ease rates, which would support economic growth. So these are negative risks that we have to face.
Well, what else should we watch out for this year in terms of the global economy, do you think?
I think we also have to be cognizant of the fact that close to 60% of the GDP or market cap GDP out there, countries are going to be going through elections. So that introduces not only economic uncertainty, but some political uncertainty is also something that the global economies will have to deal with in 2024.
I want to go back to the IMF outlook. Are there any other things that kind of stood out to you in what they assessed?
Well, yes, I think I'm a little bit disappointed that countries like South Africa experiencing the higher cost because of the geopolitical conflicts are not going to be able to stimulate economic growth. And in fact, what we're seeing into 2024 is some downward pressure on economic growth into one of the largest economies in Africa. So that was a little bit disappointing. And that's even before these geopolitical risks that we've mentioned materialize. So already some downward pressure there. And of course, economies like Japan, the question is, when will they start to normalize interest rates? Those are all issues that we will have to be watching very, very closely throughout 2024 to see whether or not these forecasts that were made materialize.